So happening a little later today, the Federal Reserve will issue its latest decision when it comes to what to do with interest rates. And you know that decision can impact a lot of things, maybe from your credit card bill to your mortgage, a future mortgage, whether you believe it or are ready for it or not, it is coming out. So let's get ready now with Matthew Shepard here, Chief Operating Officer at Delta Community Credit Union, here to talk more about what this all means for you. Matthew, always good to see you.
Good to see you, Dan. Thanks for having me.
Well, let's just start simple. What is the federal funds rate?
Sure. With the federal funds rate, that is the rate that banks and credit unions borrow reserves overnight. It's set by the Federal Open Markets Committee.
Okay, and that committee meeting, they are talking about what are we going to do next with rates. What does their decision have to do with everyday Americans' money?
Yeah, great question. I think a lot of consumers think it's rather esoteric or abstract, but it really is something to pay attention to. Just with the Federal Reserve, they have a dual mandate. Really, they are focused on fostering a strong labor market, just a jobs market, as well as really promoting stability with pricing, really containing inflation. And they do that through monetary policy, right? Just in looking at trends with the economy. And so the tools that they have is just really with interest rates and money supply. So that's what we're talking here. So as you hear their statement later, you're really getting an indication of what they're expecting with the economy over the long term.
It's going to be fascinating to listen to some of that Fed speak today because we got a PPI report out this morning that was hot. We saw the labor market number from, I think the jobs numbers from February were disappointing, very disappointing. And then, oh, by the way, you have the war in Iran right now. So how is the Fed going to approach this moment? I mean, can you just talk about what the current rate environment looks like?
Yeah, so delicately, right? I mean, it's a challenging environment for them with that dual mandate that I spoke about, just in terms of really fostering a strong labor market. You just mentioned the unemployment rate. Just with some of the numbers that we're seeing there, it looks like softening, weakening. So on one hand, they have to be concerned with that. But you're also seeing still high inflation. And certainly the spike with energy prices makes their job difficult. It's, kind of contradicting signals that they're getting.
And you talk about that spike in energy prices. Americans feeling it at the gas pump, no doubt about it. So they would welcome, I think, perhaps some lower rates because it could mean good news for their credit cards, right? I mean, how all could Americans be impacted?
Yeah, you alluded to it earlier. So just with the federal funds rate, as the FOMC, the Federal Open Markets Committee, makes changes to that, if they're lowering it, you see a pretty immediate impact on variable rate loan products. Mm-hmm. So certainly with credit cards, with HELOCs. So as we've seen, the FOMC over the last year and a half, they've lowered interest rates. There have been 6 rate decreases, and that does help the consumer with lowering some of their loan rates.
Okay, what about folks out there wondering about refinancing, maybe a mortgage, maybe a car payment? What's the rule of thumb for when that makes sense?
Yeah, good question. So rule of thumb is generally about a point. If you see a 1% difference in the current rate versus what you're currently holding with your mortgage rate, that's generally a good time to consider refinancing.
And for somebody watching this morning, maybe about to make a big decision, whether it's buying a home, buying a car, should they wait for Fed decisions like today or just go ahead and plow ahead?
I think it's all about readiness, right? So really, decisions like that should be based on personal goals, just prior planning, and just good financial discipline. If you're trying to time something, I think that's really challenging. So if you're really pursuing a personal goal and you've been planning for it, I think you go ahead. I think as consumers, we have to realize that interest rates will fluctuate over time. Mm-hmm. It's just about being prudent with financial management.
Well, it's going to be interesting to see what they do today and also throughout the year as the Fed meets and makes their interest rate decisions. Anything else, Matthew, you want to add today on this discussion?
Yeah, just, what I added. I think it's really taking the long view, just remaining calm and just knowing that it is cyclical. So I'm an optimist, Dan.
I like it.
Okay,
we need more glass half full folks around here. Come back anytime.
Yeah, thank you very much.
Good
to see you.
From Delta Community Credit Union. And for more stories on easy ways to save money, just head over to the Money Move section of 11alive.com. Plenty of articles for you there right now to check out.